Hello, everybody. Today is Monday, January 22nd, and Imran and I are finally back for our Monday morning meetings. We've had a good 6 to 8 week hiatus here on this with holidays and everything else. How are you doing, Imran?
Yeah, good, man. Obviously, we did catch up for OPEX. That was good.
That is true. I don't know what to say about OPEX. We got a lot of stuff we can say about that, but we wanted to keep this to the single stock side, and we're going to knock through it here this morning. Bring up my window here so everyone can see. All right. So we're going to start with you. Now, what was interesting is you picked up on this chip sector. Let's just for state of the record show what happened to SMCI. I think Goldman did a couple upgrades here, but this thing was up 35% on Friday. It's up another 6% to 450 this morning. It's just chip mania over here. And so you start with Avgo, which, hey, it's not up 35% in a day, but stock's doing pretty good. So what are you seeing there? I'd like to look at the volatility dashboard after this because I also think the semis are interesting here.
Well, I've been holding off on like saying sell tech because tech's just been bulletproof, but it's feeling to me a little bit exhaustive now.
Yeah.
You had OPEX, which was potentially a driver. You've had some quite gappy moves now. The things are getting a bit silly. You've had earnings revisions being marked up for a lot of these Mag 7 names. Earnings are due at the end of the month. So it's just kind of, I don't know. I kind of think that there's disappointment risk in terms of what the actual earnings and the outlook are relative to the fact that everyone's just piled into all these names, right? So I would never sell naked risk on this because you just don't know where the top is in any of this stuff. But right. I do think Vol's fairly elevated in Broadcom relative to, like, you can see that on the radar. It's Vol is trading, a bit higher relative to some of these other names. And I'm saying versus its own history, right? That doesn't mean, yeah. So I think selling call spreads on this is a way to pick up some yield. I think the earnings are early March, so I wouldn't take the risk over earnings, but I just think if we can get some consolidation, broader market consolidation over the next couple of weeks, then you could pick up some premium selling these call spreads. It keeps you safe for anything too crazy. You can obviously give yourself a stop. You don't have to lose the full distance between strikes if you run it till expiry. So you can think of it that way, right? So that's kind of how I would safely try to fade some of this strength that we've seen in some of these crazy semi names.
Yeah, the moves are really just amazing. I personally, I've been watching this AMD. They report obviously, next week too. But what I noticed on your dashboard is that, the vol for AMD is relatively more contained, even though, this stock is, I think it's probably the most attention just from the kind of retail community, I would say. But the vols aren't like, they're high, but they're not like crazy. This is AMD, here you see the earnings here, obviously date. And so, but I was thinking next week is we could start talking about maybe some calendar spreads or something like that. But just a lot of interesting things. I've been looking at this SMCI. This is kind of what I've been focused on. Its earnings are out of the way. Stock's up 35 now, plus percent. And so I too like call spreads in this name or even counter spreads, just something that, bets on the stock's even just cooling off here, right? I'm with you in that you don't want to be naked short anything in the sector, but you have these insane moves like this. And the volatility gets so rich that, it's very hard to sustain 35% moves on a daily basis, right? Doesn't mean the stocks can't go up. So, you don't necessarily want to have that delta exposure, but playing with volatility coming in here makes a lot of sense. And so if you're going to target that, let's say in SMCI, we have this forward implied vol metric on our new dashboard where, these vols up here around 85 to 90%, they'll typically come down, I think, after earnings more towards this kind of 60-ish percent. So if you wanted to target for volatility, I think that's a decent look for at the money. And then just to check Avgo, which, very same discussion we're having, that those vols can come down, a decent amount here as well. So I'm on the same page with you on that one. Intel also showing up here, it's just blasting off like all these other things. And what caught my eye on the chart just around the solid gear comment is that, this is a lot like last summer, I think, where you had NVIDIA initially just go insane, right, in prices. And it was the stock up, vol up situation, which we had on Friday. And, is this the kind of, I don't know what technical pattern this is, but, we jump to this new level and then we get this period of consolidation. And I think you and I are thinking about this period of consolidation, particularly with the FOMC about 10 days out. We may shift a little more towards what's happening on the macro front. That's your main idea for today, right? That's your one, because sometimes you offer three. You got the one here today.
No, I don't do that anymore. We kind of took away the whole YOLO nonsense, and it was more, something a bit more sensible, something a bit more what I would actually put on in the book.
Yep.
We're just trying to, we're taking feedback from our customers and keeping the stuff they like, getting rid of the stuff they don't like, basically. But the fixed rate vol monitor is worth a look if you've got that handy.
Yeah, what page are we on for that one here?
The one before.
Here we go.
That one, yeah. So this is where every day in my daily report, I put this fixed strike vol monitor, which basically looks at what the S&P fixed strike surface is doing each day.
Yep.
And so we had a 1.2% rally on Friday.
Right.
And sure, implied vol was lower in terms of the at the money level of implied vol, and hence the VIX was lower as well. But the fixed strikes didn't do that much. So you can see that at the money strikes, like the 48.50 strike was actually still up on the day slightly by about 15 bips. And only the strikes really way upside were getting offered. So, 5,100 and above on February and March expiry, those are the ones that were a bit down. So that tells me that the street isn't necessarily as long gamma as they would typically be in a market that's hitting new all-time highs like this. So for whatever reason, whether it was all that vol buying from the VIX that took them out of some inventory, it does seem like the street's got less gamma. And if the street's got less gamma, and that's why they're bidding for fixed strike vol, then that means we're likely to realize a bit of higher volatility than we typically would in these type of moves where we've gone to a new high just after expiry. I don't see it being a grindy move for the next 1 or 2 weeks. I see it being quite choppy in either direction. And that's on the back of the fact that it looks like dealers just don't have as much vol inventory as they typically have.
It's a very interesting point you bring up here, because I'll just quickly add that in our morning note, we flagged this from Friday on your point of the higher fixed strike vols. If you look at this was, scroll down a little more. Here we go. This was on Friday. We saw just massive amounts of call buying, not zero DTE style, but longer dated call buying. Take it rolling or whatever you want to into January options expiration. But this is VIX here in gold, and then the S&P. And so you can see there was this period that, synced up with big call buying, which is in this purple line here, $4 billion worth in about an hour. And then you get vol up in that same period. So this is one of those, stocks up, VIX up, or S&P up, VIX up, whatever you want to call it, that do back this idea, hey, there's some long call buying. Street has less positive gamma maybe than you know. So that's a really interesting point that you bring up here. The tricky part, in my view, is, I made this little graph here. Is we had this OPEX box. I thought there'd be more weakness into this OPEX. We had VIX pop to 15. S&P just never broke down, much to kind of my chagrin, I think, there. But we have FOMC in a week. And so I hesitate with saying, hey, we're going to continue just running to 5,000, but that 5,000 strike, everyone's starting to talk about it. There's a bunch of positions up there. A lot of those are box spreads, but I do think there's a lot of long calls to your point before. And so a lot of this stuff is looking chasey, just in general, when you look at something like this. Clearly a lot of long calls in the semi space. The last name that I want to bring up, I'm sorry, Imran, go ahead.
No, I'll just say, I think 5,000 is doable. I just think
it's only 3.3%.
Yeah. I just don't think it stays there. I think the market's not at an equilibrium point where it can just sit around and realize single digit vol right now. Yeah. So I think if we're going to go to 5,000, we're actually going to go there quite damn fast. And then we're going to reverse off there pretty fast. And we're going to find ourselves back at 4,800, having had a little short stop at 5,000. Right?
That it's a very good point, because I also think, the other thing that I just would flag real quick is that, the rate expectations are changing again, right? First we were having 4 to 6 cuts. Now we're knocking down the number of cuts, et cetera. And there's this interesting divergence where S&P, Mag 7, Tech really going higher, and bond market and small caps have not participated, at least in the same magnitude here, as you can see here at the IWMs. And so, there's this little divergence here, and maybe the Fed syncs all that up with saying, no, we're cutting rates, and, then the train moves on forward. But, there's some underlying churn here, some inconsistencies, I guess, along those. Last thing that I wanted to bring up, I like getting long some Tesla here. I don't think the vols are particularly high, so I wouldn't say they're all that interesting. This is actually the fixed strike vol change from the 8th, which is about 2 weeks ago, to today. Tesla's been very weak into this period despite the market really moving up. But as you can see on the fixed strike basis, vols are actually lower despite that stock coming down. So I think people have been selling puts, supplying some volatility really under this kind of 200 strike. I think Tesla could really catch up maybe to the market a little bit this week. And so I like the idea of not selling put spreads because I don't think the vol is particularly interesting there. But I do think the idea of just maybe getting long Tesla or long some call spreads here, playing some mean reversion could be interesting over the next 1 to 2 weeks.
It's certainly not trading like an AI stock, right? Like
no.
Yeah.
And some people are, it's interesting because some people are saying on Friday that, hey, we got to kick Tesla out of the Mag 7. And I was like, no, that's one of those indicators, sentiment indicators, like, okay, maybe due for a little bounce. I noticed Tesla was here on your buy call indicator or your compass, which would sync with, hey, vol's not really that rich. So those, calls or call spreads could be really quite interesting.
If you're a brave man, you buy Tesla calls and you sell Nvidia. I don't think I'm brave enough to do that.
No, it's I'm with you. Being short, anything in these semis is pretty intimidating. But sometimes that's where the interesting trades are, right? So, at any rate, I want to thank you, Imran. I know we kept this one quick because both you and I got to get a few other things this morning, but we'll be back next week, get more to our regular cadence. If people are interested in finding out more about your information, you post a lot of great stuff on Twitter. X, where can they get a hold of you?
Sure. So we are options_insight on X. And yeah, we're putting stuff out pretty regularly throughout the week, whether it's crypto, whether it's macro, just all things vol related, really. So you get a bit of a flavor of the stuff that we do. On crypto, we did launch a new podcast called Crypto Options Unplugged.
Excellent podcast. Yeah.
That was on X. So check that out. We're going to be doing that every week. So I'm literally going in the studio tomorrow to shoot the next episode. So that's fun. So look out for that.
Awesome. Thanks so much. And I'm at SpotGam on Twitter. And if you go to SpotGam.com, you get a free 7-day trial of all of our tools, including the dashboards that we just showed here. So we love your comments. Let us know if you like the format here, Imran's new format. Let us know in those comments. It'd be helpful. And we'll see you next week, Imran.
See you, mate. Cheers.